Hey guys, this is Pratik Oswal, founder and CEO of Glide Invest, and we are here to make investing stress free, one financial goal at a time. Hello everyone. So, for today's topic, we are going to talk about lump sum versus SIP. When looking at investing in mutual funds, investors normally have two options, whether they should go lump sum or whether they should do SIP. Let's talk about some of the differences between both in terms of flexibility, cost, risks, and why should one investor pick one over another. So let's talk about SIPs. What are SIPs? SIPs are investments that are investments that are split in monthly intervals. So for example, investor who wanted to put in 10 lakh rupees can split his investments in 10 equal parts, which that becomes an SIP investments of 10 lakh rupees over 10 months. As opposed to investing it in an SIP plan, an investor can also do a lump sum. What is a lump sum? A lump sum is when an investor puts the entire 10 lakh sum together into one single investment. So this is the definition of an SIP versus a lump sum. So what are some of the benefits of an SIP? An SIP is actually a lot more flexible than a lump sum because investors have the freedom to change the investment amount or even stop or resume SIPs depending on market conditions or more. We at Glide do not recommend changing your SIPs because we feel that the whole point of doing an SIP is to invest across good as well as bad markets. Investing only in good markets leads to poor returns over the long term. The other, I would say, benefit of SIP is that it tends to be slightly cheaper because you are averaging your cost of your fund over time. So as opposed to putting the entire lump sum today, by spreading it over say 1 or 2 years, you're actually lowering the cost slight amount. So that's a bit of a, I would say, advantage in SIPs. The third, and this is the most important reason, is safety. The problem with doing a lump sum is that you don't really know how the market will react tomorrow or day after. You might do a huge lump sum and the market might crash tomorrow. Essentially, long-term investors should not be worried because the markets always tend to go up in the long term. But the problem is stress. Just imagine you're spending 5 lakh rupees on an investment and it goes down by 20% in the next couple of months. So, which is why a SIP is something which is extremely preferable in that scenario. If you are worried about entry price or exit price, then a SIP can be a great way of investing because you're essentially averaging out your price points by investing in a monthly basis. So any investor who is fearful of short-term loss, which does not really matter over the long term, but yes, investors do care about that, can do a SIP strategy because then they can average their cost up or down. So we do feel that a beginning investor should ideally look at an SIP strategy for their investments. Anyone looking to invest a part of their income or part of their salary could probably just set up an SIP based on its current income and keep increasing it on a year-on-year basis. Let's talk about lump sums. Lump sums is also extremely popular. One big reason to why lump sums can be extremely popular is if you really invest at all once. So when the markets do go up, if you are investing in a bull market or a market that is constantly rising, then a lump sum might be generally a better investment going forward. So investors who do want to I think have a huge sum of money that's currently invested can also go through a lump sum process. We all think at Glide that that time in the market is more important than timing the market, which is why we believe that if you have excess cash lying around, we would recommend putting it and making sure it's working for you in the equity markets. So lump sum investors are obviously slightly more preferable in sophisticated investors who are looking at investing large chunks of money. But in our case, anyone can become a lump sum investor in today's world. Lump sum investing is also good if you wanted to lower your SIP amounts or if you wanted to get to your goals in a much shorter time period. If you have a goal that's coming in say 5 or 10 years time, a lump sum investment can lower or make that goal more predictable because you are putting in more money from the start, and that money over the long term will compound at a higher rate. So with that, thank you so much for today's session and look forward to the next one. Thank you so much. You can listen to us out here or check out our website www.glideinvest.com. You can follow us on LinkedIn, Facebook, Instagram, Twitter on @glideinvest. If you want to reach out to me, then I'm at Pratik Oswal 88 on Twitter. Cheers and happy investing. See you guys next week.